Having said all this, it's ironic that today crude oil is up $2.50. The dollar is getting hammered. A weekly reversal down in the dollar, and of course, corresponding to a weekly reversal down in corn. And you would think cheaper dollar would be higher priced grain and higher priced oil, crude oil, and heating oil's up a nickel. That would say, oh, we're going to use more energy and they're going to use more corn. Well, when the markets diverge like that, it's reason to be concerned in that the market is perceiving that we're going to have enough corn left over for China and ethanol and livestock and all of it, and still have plenty to start the next year. So we're seeing this thing diverge a little. And if you go back, I think the last article I wrote for Top Producer before spring and summer was an article about ethanol and corn. Do they really follow each other like everybody thinks? So it might not be a bad idea to reread that. We may be 6 months away from, again, that article assumed that getting corn to rally because of stronger prices, and we may have to wait a while for that. Soybeans has been holding in here, and I think that's because there's always that chance that these weather guys are going to be right, and we're going to see a La Nina. And if it comes 30 days later, they're going to say, well, it came, but it comes at a time when it could affect soybeans. And that's the carrot that's out there. I don't know how long that's going to last, but we're still above $9. We hit 9.48.5, I think, this week before we turned and headed south. Still good prices to be selling something, and I think if you haven't got anything sold, I didn't really want to risk more than 40% of any crop on any weather market end. And I think if you haven't sold, it's the time to put some in place and go from there. Wheat has also got hit today, but this one was a surprise because there was a lot of shorts calls. People were seeing this billion bushel crop. They're selling calls against it. The word around the floor at the office in Chicago was that, well, these guys get caught short. This stuff this week could just explode. Well, the billion bushels of wheat left over. Apparently, there were a lot of people willing to sell this stuff and deliver against it. Another interesting thing on wheat that impacts corn as well is that wheat has got this convergence thing where the CME is trying to get the futures and the cash to come together, and lo and behold, with the storage system they have, and I kind of thought they were kind of goofy when they did it, and now that the more I see it, the more I wonder if they're not smarter than I thought they were, because now we're seeing the cash price for wheat out of the field being a positive basis for soft goods and wheat. That conversely compares with $1.20 to $1.60 negative basis a couple of years ago. And this being because the millers have caught short this stuff, they need good wheat, and they're trying to scramble around buying it, and they're willing to pay up for it. The guy that's holding the wheat, or can hold it, will say, well, if I hold this wheat for 2 years, I could get as much as $2.50 a bushel for it. So if it's at 4.5 now, I can get 7 for it if I wait. That's 50% return on my money. I think I'll sit here. So now it looks like the cash price is coming up. The flat cash price is coming up, even though futures are coming down. They either got to take delivery of this stuff or somehow get their hands on the wheat. And if you take delivery, they could be getting a lot of junk they don't want. So they're willing to pay up for the good wheat. And there's some problems with the wheat there. So, and we had Minneapolis wheat that finally succumbed today. A lot of problems with Canadian wheat and rapeseed. Rapeseed is very strong. And the problem is, if you look at the stocks in Duluth and other places where there's spring wheat, there's plenty of grain to meet demand. So you've got wheat finally recognizing there's a harvest, but you've got the storage thing that's keeping it strong and keeping it off the market. This kind of has an implication against corn that we may want to look at it. And I've always proposed to have a lot of storage, and it always stayed real good lately, especially if you're near an ethanol plant. But you look at the carry, sometimes it's gotten out in northern Illinois to 55 cents a bushel. So if I make an error in marketing and I miss 15 or 20 cents like we did on some other production this week, I got another ace in the hole because I can turn around and sell that corn for 40 cents a bushel more after I harvest it than what it is at harvest time. And I can pick up that carry. I can act like a mini elevator. Well, now with the wheat having this new storage program, it could be as much as 3 cents, and it goes to 5 cents and 6 cents, and I understand as much as 8 cents. Maybe we'll talk about that in the next Top Producer article. But so you've got an elevator then that's full of wheat. You make a lot of money, and it's saying, if you want to store your corn here, you're going to have to match what I'm getting for wheat. So storage could get expensive, which means the carry could go up. And we could even get more just because we're bleeding off of the wheat thing. So these things all kind of have an influence on each other, and so don't underestimate the value of on-farm storage. I think we'll get a chance to earn a big carry, which then may be able to say that the December 2012 corn gets to be 45 or 55 or 50 cents higher than any delivery month we have now. And then you look at it and say, well, I'm going to hold my corn and sell it for 50 cents more next year. If you hold 20% of your acres in the bin and do that, you made at 200 bushels, you made $120 an acre more on that 20%, and then you'll wonder why you didn't do it on 100%. And suddenly we've got a tight market because you and I are storing it, hedging it off. We can just get the bankers to understand that we need a couple of years worth of cash in order to wait it out. It would be a miracle. But that's the miracle, I guess, of marketing and understanding that there are other avenues than trying to compete with these speculators who are moving money in and out. One other thing today, and I do not have the hogs report out yet, but the Lynn Group, who we work with somewhat in the Board of Trade, came out with their estimate of acres based on the people they've talked to all over the country. And they don't do a formal survey like I do or like Informa does, but they get a good idea. They've come in with a surprise, and that's with the acres number in corn, 300,000 less than December. Most people are thinking it's going to be more. I'm not surprised by that, and we both saw acres going down in North and South Dakota. But the surprising part is there are 1.5 million acres less soybeans than what the government said March 30th. Well, that's compared to a lot of people thinking there's 750,000 to a million more. So there could be a 2.5 million bushel divergence in estimates out there. Corn, there's a lot of thought of. Corn, I think, wants to be 500,000 more. So there's almost a million bushels difference. So there's enough room out there for someone to be surprised come next Wednesday when we have that acres report. And there's also a lot of talk that farmers are loaded with corn, haven't sold it yet in the elevators, and we'll get a stocks report next Wednesday and a planted acres revised estimate. Now, the Lynn Group finished their estimate this week. The USDA finished theirs around the 10th or 12th of June. So if you'd asked me in June whether I intended to plant all my beans in Illinois, I'd have said sure. Suddenly I get 4 to 8 inches of rain, and you asked me yesterday, and I'm saying, no, I'm all done. I'm going to prevent plant with it. Well, that's what Lynn Group's scenario is that guys went to prevent plant as soon as they had a chance because they weren't taking another chance like a year like last year. A bird in the hand's worth two in the bush, and we paid dearly in drying costs for that late corn last year. So, again, on Wednesday, we may not know the truth again until October when they revise it again because you got to understand how they take it. They're asking, what do you intend to do? Well, I intend to make $1 million, but next week I find out I lost my chance and I don't have that intention. So what they say on the June 30th could be a lot different than what Lynn Group says and other people say. So there's going to be some surprises out there. Unless you have any other questions, Linda, I think that's about it. I probably covered everything. I do not have the hogs report, but pay attention to that. If it's bullish, that just means we have not yet turned on the corn eating sector of the livestock to come on with this eating more corn. But certainly a drop in corn, if it doesn't increase hogs planted on the farm now, then it certainly will in the September 30th crop report for the hogs. Another intention, especially if corn is in the lower end of the $3 range.